Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Hope you're all having a great week. Like I said yesterday, this anticipation is building for earnings season, which, for all intents and purposes, basically kicks off this coming Monday. Got a pretty busy lineup, and then they're just going to rocket forward for just a super, super jam-packed 3-4 week stretch. This week, unfortunately, a little bit on the slower end, just in terms of schedule news. There's been plenty of action, outside of earnings, but just in terms of like what's scheduled, I haven't really had like a lot of big names. And what I find is like in scenarios like this, when there's only a few names, like you're you feel more obligated maybe to go after like the names just because there's only a couple. You want to play some of these catalysts. There's only a few names, so you're like, okay, what's the big deal? I'll try all of them. There's only like three or four, right? But it's really important to kind of be selective, right? So just because there's only a few names and you want something to do, doesn't mean that you should be doing something, right? So coming into this week, Bed Bath& and Beyond, definitely a name we've traded in the past. It's had some really big moves when it's reported over the last couple of years, right? So you can see, I'm just using like an arrow here. You can see that's one, another one, right? Obviously, this was an earnings report, so you can see the last three earnings, really significant gaps on the stock. A lot of different directions, so down, up, and then down. This was activist news. So coming into like this quarter, you're like, okay, like this one has like a pretty good history of moving, right? And it's awfully unpredictable in the sense that kind of like back and forth, like down, up, down, etc. But the problem was like the setup this quarter just wasn't as compelling, in my opinion, right? And really, what I mean by that, and how like that develops is because it's kind of fallen into like the trending stock trade, right? And I've gone over like trending stock trades, what I mean by that, a lot in the past, but I mean, there really hasn't been an uptick on this name, or there hadn't been an uptick on this name since it last reported. It broke below the 8 EMA, and that after it reported back in April, and it really hadn't closed above it since. I mean, it just been riding the 8 EMA lower, and then more recently it was a 20 when it finally started to firm up down here. So it was just very consistent, like lower highs, lower lows, just like over like the 2 to 3 month stretch going into earnings. There really just wasn't a change in pattern or change in momentum. It was just kind of steadily lower, just riding the moving averages. Expectations were dropping, the price performance was dropping, and those scenarios they can make like the trade very, very, very one sided, right? So I feel like we're used to seeing, we're more accustomed to seeing this type of pattern on the bull side, just because the market's been so strong this year. But I mean, this is one of those rare occasions when it's kind of the opposite. I mean, this has just been straight down, riding moving averages, consistent lower lows. People are more bearish. People are expecting downbeat numbers, right? Especially after a lot of peers that had kind of like mixed reports this quarter. So when you get like a scenario like this, um, you know, oftentimes I find that it's tough. It's tough to it's tough to gauge expectations, right? Because the stock had been so negative, performance had been so negative, coming off like a downbeat report, right? So expectations are very one sided, right? And one of the hallmarks of the trending stock trades around earnings is the lack, typically the lack of volatility, right? And again, I mean, that's created for a couple reasons. First off, obviously like the steady stock performance, but also like the expectations, right? So the kind of like the one-sided nature of everybody expecting like kind of like a downbeat print. Stock is getting creamed. Some of its peers have had less than stellar reports. So it's like expectations get one-sided. The stock has been in like a very steady range bound trend, right? And that just kind of suppresses volatility. So that's why you'll hear me talk about it a lot. I mean, mostly this has come up with a bunch of software stocks because they've been in such aggressive uptrends this year. It's just that, like for me, when I see a stock in a real steady trend going into like a catalyst, like an earnings, it's almost like a pattern where I'd prefer to avoid, right? So either leave it alone or a couple of the ways like I go about it if I do want to be involved would be a longer term spread, right, to kind of smooth out the high near term implied volatility. So if you push the bet out like several months, then the high implied near term implied volatility um, would you kind of like you kind of like outmaneuver that, right? Or calendar spread. So selling again selling the high near term implied volatility in favor of a longer term position, right? So using like the near term premium to offset a longer term swing. But both bets basically looking to um, looking to capitalize or maybe minimize the high near term implied volatility of the options. So, long story short, right, coming into the week, when I did the earnings on the radar video, Bed Bath & Beyond was priced in about $1.50 to $1.60, which, historically speaking, I mean, that actually was a little bit lighter compared to its average move over the last 3 quarters. But the problem, again, it fit that trending stock trade bill. So even though it was cheaper from a price wise than its average over the last couple quarters, it didn't seem like it had the recipe for a big swing, and that's why I decided to leave it alone. And I'm not going to be a hindsight trader, but as it stands, I mean, the stock only moved about $1, top to bottom. So again, just like a nice example of why you'll see me oftentimes avoid stocks that are in like really strong trends into catalysts, just because like a scenario like this. All right. So I know kind of like a long-winded breakdown of Bed Bath & Beyond, but it's useful. It's kind of like a valuable lesson, especially with the earnings season around the corner. We do routinely see a bunch of like top performing names and really strong trends going into earnings, and you're probably wondering why I avoid them, and this is basically the reason why. All right. So let me know what you guys think, whether it's Bed Bath & Beyond, about any of the other open trades, or maybe what's coming up next week, right? I mean, we're going to have our next option session this coming Monday, so a lot of the focus of that session is going to be about just breaking down like early reports, what to look for, what strategies we'll be targeting, and so on and so forth. So there'll be plenty to talk about at that session, that's for sure. All right, so hope you guys have a great night, and I'll talk to you all tomorrow.